Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 12th of August, 2023. And it's the weekly technical analysis for spot gold and dollar yen for the third week of August. And let's take a quick look at both pairs, which seems to be clearly moving in opposite directions, with the dollar yen climbing up and almost testing the highs for the year at just above the 145 level, whereas the spot gold has been continually being rejected and moving with a bearish bias. So let's take a look what were the key drivers for last week that drove the US dollar stronger, and also take a look at this coming week at what a couple of central bank minutes that's going to be released, the RBA and the FOMC, and as well as US retail sales figure. So let's take a look at the review for last week. And here's a look back at last week's key fundamental news, where main driver was from the US CPI figure on Thursday, where it came out slightly lower than the forecast figure, but compared to the previous month, which was 3%, the forecast was already higher than expected. So, and it did come in higher as well. So initially, the reaction was to spike higher against the US dollar, but after that, it just hit the resistance zones and fell back down, and followed through on the Friday with the PPI figure, which came in stronger than expected and higher than the forecast. So that continued to provide support for the US dollar to climb up higher. And a surprise from the UK with the GDP figure coming in stronger than expected. So that helped support the sterling pairs and the cable to not drop as much as the other major pairs against the US dollar. So looking ahead for this week, there's a release of the RBA minutes and the FOMC this coming week, and we'll get a glimpse into details of their meetings, and we'll see whether there's anything discussed for the next upcoming meeting and rate decisions. But key news this week will be from the US again, with the retail sales figure and coming in with a higher forecast compared to the previous month's figure. So the market expecting a stronger, robust figure this time round. And from the UK, their CPI figure is forecast below 7%, and it's been dropping over the last few months. So compared to the previous month was just below 8, and now they're forecasting below 7. So that's quite aggressive forecast to for a lower inflation figure. So that could impact the sterling pairs, and that could drive it lower actually. If this could impact and influence the Bank of England to pause and slow down their rate of increase. Then there are also some jobs data from the UK and Australia. And again, UK on Friday with their retail sales figure, but this time a negative forecast compared to the actual for the previous month. and it has been oscillating around the zero mark. So it has been positive and negative, alternating every other month. So after a strong figure the previous month, market is expecting a lower figure this time round. Okay. All right, so let's move back to the analysis. And let's take a look at spot gold, where it has been declining from the start of the week after falling below this trend line now. And was not able to recover. It did attempt to recover on Thursday with the slightly lower than expected CPI figure, but it was still higher than previous month's figure. So it was a short-lived attempt and quickly rejected and closed bearish for the day. And also on Friday with the US PPI figure, which came out stronger than expected. So it's just hanging on, attempting to find some support just above the daily 200 EMA. But with this bearish momentum, there could be further bearish moves this coming week. And this area now where it broke down is going to be interim resistance. And 1950 is going to be a key resistance now. And we can remove this as well as this areas. And in 75, we can leave that for now. All right, so next key support at 1900, and along with the swing low at 1893. So that's a 70 pip band there. That's a very critical support zone now. And let's also take a look on a weekly time frame where there is a very bearish close for the week. And looks like, yes, it is targeting the swing low with the weekly 55 EMA, just right there. Okay. Now let's see if we need to update some of these FIBs and perhaps prepare for a breakdown from this support level. Let's just flip it over for now. Leave the bigger swing as it is. But let me add a smaller FIB reversal swing here. Where it's right at the 78.6 FIB retracement, and yep, this maybe breaks through the swing low, then the next key target is going to be at the 138 FIB extension at the 1856, almost 1857. And not sure if it's going to get down that low, but it needs to find some support at the swing low. Critical for spot gold this coming week. And we'll see whether this week's news will have any impact with the retail sales and the FOMC meeting minutes. All right, let's compare this with the US dollar index, the DXY. And here's the US dollar index. It did try to break above this downtrend line, but only on Thursday after dipping lower due to the US CPI news, hitting support at the swing low at the 100 pip, managed to bounce back very strong and close above the trend line. So that bullish close there with a hammer-like candle resumed on Friday with the PPI figure, a better expected figure, and continued to target the 62 pip resistance zone. So that's the key resistance, and this break of the trend line here, that's going to be support at a 102. And this is definitely a key support at the swing low. Let's mark this as a strong support zone now. And right below that, another support at the 101. And let's remove this for now. Now, above this, I think we could actually target the 103 zone along with the 50 pip. So it could be bullish momentum to continue higher, and it needs to break above the daily 200 and either hit the 50 pip or maybe even the 103, where it aligns with the downtrend line of the bigger symmetrical triangle, upper trend line of the symmetrical triangle, where it broke down the previous month. Now it's climbing back up to retest that all the way and perhaps climb back into it. So we'll see. So critical at the 103, that could be a target there. Let's check the weekly time frame. And yes, that's a very strong bullish candle there, and a strong bullish close. There is likely to be a continuation move. So critical area of resistance now, there's the lower trend line of the symmetrical triangle, and there's the 50 pip and the round figure 103, which aligns with the upper trend line of the symmetrical triangle. And we zoom out, you can see that's a major consolidation triangle where it did break down from there before. Okay, so let's see whether this week's news will provide any impetus to push the US dollar even higher with the retail sales and the FOMC meeting minutes. Let's move back to the other pairs. Let's move on to dollar against Japanese yen, where it has plowed through the 144 round figure resistance, and with a strong move on the CPI news from the US, and continue with the on Friday, but just to reach the 145 round figure, and it's going to attempt to test this year's intra-year high right at the 145.07. Let's take a look at the weekly time frame, and that's for this year, where after a strong push up in the towards the end of the first quarter, pull back and then continue to climb back up. And if it does break, it's going to attempt to reach the 146 round figure and likely into this zone here. We could just add a resistance zone. Let's mark this resistance zone here. Okay, that's quite a wide range here, and that's above the 147 and to 147.70. So we could add the 147. Right, so that resistance zone is still quite a couple of hundred pips away, but needs to get through this resistance, this swing high, and climb up higher. So we could update the fib, and let's just change it to a reversal fib here. And it's going to be much higher at the 148, just above 148. If we leave it at this swing move, let's see where the nearest target is going to be. It's also way too high, 150. So let's move it back down, and let's see if we can get a smaller swing to try to target. And let's this swing move with a bullish continuation move, and attempting to break the 162 and 200 fib is at the 146.60, 146.66 area. So let's see. Let's see with this swing move to see whether we can get a reasonable target or resistance zone to look out for. But for now, let's move the strong resistance zone at the 146.66. Support can move up now to the 142. That's a strong support here. Can remove this as well as this lower one. There is a interim or intermediate resistance at this 146 round figure. Okay, All right, so quick check on the weekly time frame, and yes, very strong bullish close, and likely a strong follow through with the bullish momentum. All right, so do check out my other videos on the other major pairs, and have a safe week and a good trading week, and cheers for now.